Today I want to talk about Trump's invasion of Venezuela and the economic consequences it will have. I believe looking at this invasion from a pure economic perspective, it's actually quite a good policy, and this video is going to justify why. Now, I'm not going to talk about the ethics or whether or not it violates international law. I'll leave that to the political YouTubers. But what I will talk about today is just the pure economic consequences and my hypothesis for what I think will happen in the next few years after this invasion has happened. That this invasion of Venezuela actually changes the game for what will cause the crash. It won't be a conventional crash caused by too much money printing and the impeding inflation that would come with it, and then needing to hike up interest rates, which would then crash the stock market. You think that this changes the game and it actually delays the crash for the next few years. But that's with a few assumptions and justifications, and I will explain why. A few weeks ago, I made a video talking about why I think 2026 is going to herald a crash. Well, I'm now going to debunk my own video and my own hypothesis in that video, because I believe that this invasion has changed the game in a big way. Even though the impacts of it will be delayed by a few years, it will not be immediately felt. I do think in the short term there's going to be more confidence regarding oil supply, which will then tame inflation, but it'll be a few years before there's actually any real impact and follow through from this invasion. Now, my hypothesis as to why this is a good invasion, if there is such a thing, is to talk about the response to 2008 that America had. What did America do after 2008? Everyone knows the answer to this. It's to start doing QE, quantitative easing, which is to have an easy credit policy. The Federal Reserve set interest rates to 0% after 2008 and held them at that level, but they also had quantitative easing to give more credit to the market. So you started to see a stock market rally and house prices take off, assets in general. This is why after 2008 people started to talk about the detachment between the real economy and the performance of assets like the stock market and housing, because housing and the stock market started to take off while real wages remained largely stagnant for the next few years following 2008, the crash that happened. But what people don't talk about is the other thing that America did after 2008, which was to start fracking and to increase oil supply. So they were flooding the market with all this credit, easy credit, low interest rates, but consumer inflation actually remained subdued. Now, you can debate about total inflation, including assets and how housing took off, but the things that did matter to people, especially the poor, were energy and transport costs, which were affected by oil. It took a few years for this oil supply to start coming through to the market, but after 2013/14, the oil price suddenly crashed. And that's when America's economy actually started to take off and to improve for the lower quintile income earners, because their real wages started to improve. Inflation started to ease on the metrics of their transport costs and food. Oil is everything, especially for consumer goods. So you kind of saw a K-shaped recovery, if that's the best analogy, where assets took off, but consumer inflation, being energy and transport, remained somewhat subdued. So those were the two policies that America used to get out of 2008, which was to flood the market with credit, but also to flood the market with its own oil supply so it wasn't dependent on energy imports. And that was an Obama policy after 2008, but a very good one. Energy prices were what I consider to be the cause of 2008. In fact, energy is behind most recessions besides the 98, early 2000s dot-com bubble / Asian financial crisis. But that was a very shallow recession. But every recession correlates to high oil prices for the most part, such as the early 90s recession, 2008, the 1970s stagnation, and the reason why the 80s economy ended up being quite good, especially in America, not so much in New Zealand, was because in 1983, the price of oil just cratered. So besides the first Iraq War, America pretty much had a golden age from the 80s to the 90s, and this is recognised in common culture, but people don't think about why. But the reason why is largely subdued inflation caused by cheap oil prices. And I believe that oil was what actually caused the 2008 recession and housing market crash in the end. That's the thing that really twisted the knife for a lot of people. It wasn't just high interest rates, variable interest mortgages. Think about who the most likely people are to have risky lending. It's low income earners, pensioners, people with a part-time job, people who are dependent on needing to drive to their work. Well, 2008 was almost 20 years ago, so you talk about a lower base. But oil was over $100 at the time. Today, oil, 20 years later, essentially, is at $60. So interest rates went up in 2008, well, throughout the 2000s, and peaked in 2008. But the thing that really did it for a lot of people was the high oil prices, which caused interest rates to go up, but also was a double whammy on top of it. It was increased cost for people. It wasn't just that interest rates went up and other costs were stagnant that people needed, such as groceries or transport or their electricity costs. Energy and interest rates went up at the same time, so it made their ability to service mortgages just impossible. If it was just solely interest rates, they could have made cuts somewhere along the way. Perhaps they could have changed there would have been a substitution effect. They would have not purchased clothing. But you need to repay your mortgage. You need to purchase fuel. Without those things, people's lives just fall apart fundamentally. Everything else can be worked around. High fuel costs made it impractical for people to start going to their part-time jobs, because why would you drive to work just to pay for your fuel to get there? After tax, you might only be making $10, $20 for a few hours of work. Why even bother? And that's why things fell apart in 2008 ultimately, I believe. I don't actually believe it was just risky lending by itself. So the reason why I believe that the housing market took off after 2008 was because America actually addressed these problems. They made interest rates really low. They fixed them for a period of 30 years, but they also took care of energy prices, which means they could sustain lower inflation, meaning lower interest rates, which means more asset growth. But it also did make life easier for people in the real economy, even though it didn't necessarily correlate with the performance of the stock market after 2008. But in terms of a policy doctrine and an economic policy, I actually think it was pretty reasonable what they did. Now, after coronavirus, this dynamic kind of changed. What America did after 2008, it kind of started to detach. People are fully aware of the inflation that ensued after coronavirus, but there was also the same time that the invasion of Ukraine occurred, and they tend to correlate the idea of 8% CPI inflation with 30% money printing that occurred during COVID. But there was a lag effect from when they actually printed money during COVID and when inflation started to follow through into the economy. But they actually get the causes wrong, I believe. After we printed 30% of the money supply in one go, all Western countries practically did the same thing. America, Australia, New Zealand, the UK. But there was no immediate inflation for the next year or two after that. But what changed? The Ukraine war in 2022. That's when oil prices started to seriously shoot up. And that's when you started to see a follow-through of 8% persistent inflation per year. I don't believe it was actually debasing the currency by itself by 30%, which actually led to all this inflation, CPI inflation. The biggest change was the invasion of Ukraine in 2022, which sent oil sky high, and that's when you started to have problems with food prices, oil prices, and America has been able to somewhat subdue this by putting price restrictions on Russian exports of oil. The following year or two after the invasion of Ukraine was rough, and I can attest to that personally, 91 fuel being $3 a litre here after the invasion. This wasn't the case in 2020 and 2021, despite all this money supply being added. The difference was oil prices. Oil shot up after 2022, and that's when inflation started to actually become an issue. It wasn't the money printing itself, I believe. So oil is everything. If you want to keep the lights on, if you want society to remain and sustain itself, you need cheap energy, you need cheap oil. I believe that this invasion will allow America to return to its post-2008 orthodoxy. This is going to be its return to normal. Now, oil prices are already pretty cheap now at the time of recording, at about $60 a barrel. They've been on a downward trajectory for about a year now, but America gets to bolster its position even more by adding all this supply from Venezuela. But it will take a while for this supply to come through. But it completely destroys OPEC's monopoly. Even though Venezuela is a part of OPEC, it gets rid of the power out of the Middle East specifically. Russia's energy is subdued, and even if they get rid of the price caps, that only means Russia can sell more to the West, so that means more supply is going to come through anyway. I can't see a situation where there is going to be an oil price shock, an oil going up past $100 at all on a random basis, which would lead to an economic crash. I actually think good times are coming up ahead. On the basis that oil supply seems to be pretty stable, we're going to see even more oil supply, which means subdued inflation, which means they can lower interest rates, and especially with how Trump is going to pick his own Fed chair in the next few months. And Trump's an easy money kind of guy. He likes easy money, he likes deficits, so he's just going to let the money printer rip. But the thing about Trump, he is pretty sane with his energy policy. All things considered, he does support things like fracking. He supports the supply of oil, so you can increase the money supply and have things rip. Inflation can be subdued because they have all this oil supply coming through, maintaining the real economy. Trump doesn't go full retard with his tariffs, and he's able to maintain a pretty stable economic policy to his standard. And then you have all this oil supply from Venezuela start to ramp up over the next few years. It won't matter in the immediate term or even past the midterms, but I mean on a long-term basis, there's a lot of reasons to be confident. Why does America have big deficits? Well, it's big debt burden to start with, but also the high interest rates caused by high oil prices in 2022, meaning that they had to finance their debt at higher rates. They've had trouble selling off bonds to support this debt burden. America can actually start to reduce its government deficit off the backs of cheaper oil prices, because that will lower inflation, meaning they can lower interest rates, especially if Trump gets his Fed chair pick. America can shrink its deficit, refinance at lower interest rates. America's government position will actually look pretty good relative to other countries, and especially compared to where it's been recently. America won't need to sell as much bonds to service its debt and to maintain its deficits. I actually potentially foresee a USD rally based on government finances looking better, but also the oil will be sold in USD from Venezuela. It completely destroys BRICS and de-dollarization and China's influence in that hemisphere. Another second order consequence I see is the return of the yen carry trade. Japan will go back to having lower interest rates once again because their interest rates have been going up. But why? It's because they have high energy costs. They have stable oil supply and the price remains relatively stable, which I think it will after Venezuelan supply starts to ramp up. Then Japan will lower their own interest rates once again, which will mean the return of the yen carry trade. Another second order consequence I see is that the USD will start to rally, which will only lower inflation even more, which becomes a self-perpetuating cycle. Imports like their cheap Chinese crap that Americans love to consume will get even cheaper, and that's all off the backs of oil being sold in USD, the deficit being smaller, America being able to have its bonds get sold and fulfilled, What does this mean for the economy, but also the stock market? I actually believe now the next few years are going to be a continued rally for stocks. I thought 2006 things might start to peter out, there might be a crash, but Trump will at least choose his Fed chair pick and then they'll start running the money printers. But he's actually done something better, assuming Venezuelan supply ramps up and nothing else changes. I see interest rates continuing to decrease. The money printer's already starting to run, it's starting to pick up pace. I'm going to see subdued energy and food costs over the next few years, especially in America, which will affect the whole world. So I think this will actually let the bubble grow even bigger because there's going to be even more credit, lower interest rates to support the stock market. So we're going to see more VC funding happen and more risky lending. So things are only going to get bigger and bigger. So I think if there's going to be a crash, we have to see oil supply destabilise. But I cannot foresee that happening over the next few years. I only see more stable oil and cheaper energy coming onto the market over the next few years, which will lower interest rates, which will lower inflation, which will let them run the money printer without any consequences. So if there's going to be a crash, it's going to come from black swan event, most likely, or a change to the supply of oil at a fundamental level. Ultimately, I think this means full steam ahead for AI, it means full steam ahead for tech stocks, the Mag 7, and the stock market generally. All off the backs of this invasion in Venezuela. And that's all assuming things start to ramp up, they start to add their oil supply, and that Trump just keeps the economy stable. He doesn't do any more stupid tariffs, he doesn't do any more stupid invasions, such as Greenland, which they're talking about in the media recently. But for those wanting to learn about the economy and what affects things, look into oil. I really believe that oil is everything. Thanks for watching. Don't forget to like, comment and subscribe.